money. Like, dang, if you're going to put investors' money into something, you
Yeah.
should be able to vet that deal.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Welcome back to the show. I am your host, Todd Dexheimer, and with me, excited to have Courtney Moeller. Courtney, how are you doing today?
I am awesome and super honored to be here with you.
I appreciate you joining us. I'm excited to have you on. A little bit about Courtney. She's a U.S. Navy veteran, #1 best-selling author, entrepreneur. She's a speaker and a blockchain expert. We're going to dive into a lot of fun stuff, but look, as an entrepreneur, she figured out quickly tax benefits of investing in oil and gas and real estate and all those others assets. So she started partnering with her investors to allow their hard-earned money to do the same thing, right? To offset their ordinary income and capital gains and provide great monthly cash flow and, of course, great tax benefits. And yeah, well, with that said, why don't you give our listeners a bit more about your background, and then we'll dive in.
Yeah, that's really that intro, you say all that, and it's like, man, I've done a whole lot this last few years.
You've done a lot. I mean, man,
Yes.
a book, speaker. You're all over the place speaking. You've spoken with some amazing people, Robert Kiyosaki, and so on. And yeah, you're doing a lot. So it's amazing. And by the way, thanks for your service too in the Navy.
Oh,
So
yes, thank you. Everybody always asks, like, you don't look like somebody that's a military person. And you're right. And I never thought I would be, but my parents were like, you should join the Air Force. And I thought, what? That's for men. Like, that's not my thing. And ended up being in avionics. So repaired all of the
mm,
aviation, kind of that electrical equipment in the planes, and spent all of 2003 in the Persian Gulf for
wow.
after 9/11. And it was an experience. I enjoyed it, but it was 5 years and that was enough.
Yeah,
So,
yeah, yeah. Well, the 5 years is plenty, though. I mean, that's you know,
yes.
that's we definitely need people like you that are willing to step up and do that. So
Yeah. Well, back to your original question, because I know I kind of sidebarred us there for a second. So I'm originally from Midland, Texas, which is West Texas. Everything
yeah,
there is oil and gas. My
everything.
dad, yeah, my dad was a petroleum engineer. My brother drilled oil. My uncle had a well service or has a well servicing company. So I mean, we literally rode pump jacks on a Friday night, after
Mm,
football games. And
that's
so
funny.
yeah, I inherited my dad's oil and gas company about 12 years ago, which is
Mm,
really great. It provides a lot of really great monthly income, which is awesome at $80 a barrel. And then oil dropped to 20, and it had this
mm,
massive impact on our income and our lifestyle. And I thought, okay, I've got to figure out how to diversify this and not be so dependent upon the price of a barrel of oil. And so that led me down this, investment journey on how to do that. I wanted to continue working for myself. I didn't want to work for other people.
sure,
So
sure.
I thought, how am I going to do this? And it led me down a lot of other avenues and got heavily involved in blockchain and Bitcoin and different cryptos and things like that, and was invited to speak on a panel called What is Money with Robert Kiyosaki and G. Edward Griffin and some other amazing people. I was so nervous, but it was good. It ended up turning good. I can remember them asking questions and I would answer, and I could see Robert and G. Edward off to my right shaking their heads, and I thought, okay, this is good. They're agreeing with what I'm saying. So, but that conference is where I learned about syndication. And I thought, holy cow, I thought I was going to syndicate real estate, and I have syndicated some, but I figured out very quickly that the tax benefits of oil and gas pair very well with these assets.
Yeah,
So now, I'll deploy capital into oil and gas so I can get those tax benefits. It comes back really fast, and then I'll redeploy it into real estate. So, and that has helped me to grow a lot faster and build wealth faster, which is I'm trying to build a legacy for my kids and change their, paths for their life. And, I don't want them to get into corporate America. I want them to build a life by design around, things that they love doing. So,
yeah, that's cool. So how does oil and gas pair with? You said it pairs really well with real estate.
it
How does
does.
it?
Well, So, a lot of people come to me. I have a lot of high income earners, high net worth earners, doctors, dentists, CEOs, business owners, real estate syndicators. Oil and gas has the ability to offset W-2 income, any kind of active income, capital gains, passive income without having to actively be involved. So a lot of my investors, they're doctors. They don't have time to, put 750 hours into being a real estate professional. They want to
Sure.
own real estate. And so they'll come to me, make that investment. We typically offer anywhere from 80 to 90% depreciation in year one against their active income. So you're making $100,000 investment and you're getting 80 to 90,000 of that reduced from your active income. That's a great tax benefit. And so and it can offset the income from real estate as well. And because if you're in the right type of deal, the money comes back. I mean, we're typically looking for things that return capital in 12 to 18 months. So if I invest that, get the tax benefits, get my money back, now I can go in and invest in multifamily or self-storage or, whatever other asset class I want. And so now in a relatively short time period, I have now funded two separate investments with the same capital, which is great because I want, you know, all of these assets are cyclical. Right now we're seeing a tough time in some of the multifamily space with, the interest rates and everything that kind of happened with everybody in the bridge loans. And really, real estate's more of an appreciation play where oil and
Yeah.
gas is really more of a cash flow play. So I want multiple of all of them. Eventually at some point in time, the price of oil is going to go back down. But as I've got, multiple real estate assets that are appreciating and divesting, it's not impacting my income and my lifestyle.
With oil and gas, so there's a great depreciation. You could take it no matter what. If you have a W-2, you can it doesn't have to just offset passive gains. It can offset actual earned income gains.
Yeah, active income and capital gains.
Wow.
So, which is great. It has to be a working interest in oil and gas. You can't buy mineral rights. So there's different ways
Got it.
to invest. So it has to be a working interest. But this was written into the tax code a long time ago. And I was actually on a CPA call the other day for a deal like this. And he said I had my team go back and research, 40 years. And he said we could never find one single tax return that had been audited for utilizing the tax benefits of oil and gas. And it was
Hmm.
something the IRS implemented over 50 years ago to incentivize exploration and drilling. And it's been in
Interesting.
place ever since.
You said it's a cash flow play. What kind of cash flow do you get on, let's call it $100,000 investment? What kind of, cash on cash returns can somebody expect?
Yep, those are all going to vary. Ours typically, let's say we've got, $100,000 investment. You're looking at anywhere from $3,000 to $6,000 a month in cash flow.
Okay. Yeah.
And the other
So,
cool thing about that working interest is you get what's called a depletion allowance. So you only get taxed on 85% of that for the life of the production of those wells.
oh, that's even better. Yeah.
Yeah.
You So when you offer an oil and gas opportunity, what kind of, I mean, it really intrigues me. I haven't done any oil and gas. I really think it's a intriguing industry, and I like what you just said there with the depreciation. That's amazing. The cash flow is pretty solid. Um, w- how how are you mitigating risks? And I guess what kind of oil and gas, maybe these, how we should first start out is like, are these established? Are they
Yeah.
exploration? What are you typically investing in? And then how do you mitigate risks?
Well, that's such a good question, and my strategy is different than most people because I'm going in. I'm considered a non-operating working interest partner, so I'm not the operator. I typically will go in and acquire interests with major operators. Our last deal that we closed out was with EOG. EOG is, in the top 20 producers in the United States. I mean,
Mm.
they're a multi-billion dollar company. Um, and I found a way to kind of backdoor my way into what they're doing because they don't need public money. They're not looking, when they go to drill wells, they don't need public's capital to go get this done. They're a multi-billion-dollar company. So what I have done is find a way to acquire interest where they have drilled so that I can take part in their deals and their wells. And so I have everything I've ever lost in oil and gas has been with smaller operators, and not that I'm knocking them. I always want to root for the little guy and the guys that are out there working and grinding, but not if I'm bringing investor capital into it. So I've got a pretty extensive checklist that I go down. It's got to be a major operator, and I will consider a non-major, but they have to have drilled, more than 1,000 wells. They have to have drilled, over 100 wells in the area that they're drilling in specifically, because drilling in Wyoming is not the same as drilling in Texas or Louisiana. You're going to have different issues. And I like to kind of explain it like a surgeon. Can a general surgeon operate anywhere? Sure. But if you need heart surgery, you want a cardiologist that's going to
Right.
specialize on that heart. The general surgeon can probably do it, but the cardiologist knows all of the intricacies of the heart. And it's the same thing. Sure, can any operator drill a hole in Wyoming? Sure, but somebody that's drilled 100, 500, 1,000, 30,000 wells in this area, these guys know what kind of what kind of issues they might have. They know the geology of the ground. They've already put in place the things that they're going to need to accommodate any kind of issue they might have. And the other thing is the smaller operators don't have the capital. Like if they come up with issues, they'll end up doing capital
Mm,
calls and things like that because they don't
yeah.
have the capital sitting in the bank to cover those things. I am going in, typically our last deal, I came across somebody that had about a 13% working interest in 4 wells that EOG just drilled. And so I paid a lot more for it because they'd already drilled, but we knew when we acquired it that they had already hit oil in all 4 of them. They hadn't brought them online yet. But here we are, major operator, #1 producing area in Wyoming. We know they've hit commercially producible oil in all 4 wells. So we paid more for it, but I was okay with that because we bypassed a lot of the risk in the drilling process with delays and potentially hitting a dry hole and things like that. So it's a little harder to come across those kinds of opportunities, but that's what I like to do. We're looking at a deal right now. They're in the process. They just started drilling. Another really, really great company. They've got tons of experience. They actually were the kind of pioneers in this area that developed a lot of the technology to drill here, which is exciting. And their set of wells directly to the west of the project we're looking at has performed very well, and we're actually expecting this next 4 to come online and do better. So they've already started drilling. I've been kind of dragging my feet a little bit because I expect them to have that first well finished here pretty quickly. And I'd like to kind of know what that one looks like before we go ahead and, wire off our money and be done. Because once we've got oil in one, I mean, I know they're going to do a good job, and it could be potentially. Here's the other thing: you've got to have multiple wells. I'll never invest in a
Mm,
project that only has one. You've got to have multiple, because then if you do end up with one well that's dry, you've got the other wells that can come in and, outperform, or maybe they end up just being average. But the more wells you have, the more you mitigate that risk. And the
yeah, that
further
makes
you
sense.
are along in the process, the better. But here's the thing: when it comes to these major operators, even if they haven't drilled just yet, I know if Exxon's going to go put a hole in the ground, Exxon is a multi-billion, 238 million billion dollar company. Like, I know they've done their research and where they're drilling, and I'm pretty confident in investing with them.
Yeah, and if it doesn't work, they got the cash to back themselves, right? They're not.
Absolutely. Yeah, if they have a drill bit breaks or something happens, I mean, they've got 10 on standby, and they swap that sucker out and go.
Yeah.
Where these smaller companies, I had a company that they were trying to drill this well for like a year, and I'm like, what is happening? Our project in November, Anschutz drilled all 12 wells in like a month. 12 in a month, like fast. They just bust those suckers out, and that's what you want.
Yeah. Yeah, that makes sense. And it makes sense that obviously the farther along on the project they are, if they've actually got the oil commercially available coming, that it's going to be a lot less risk than
Right.
the exploration. Because that's what has made me always nervous about oil, is that well, what if they don't produce?
Well, and
And
all
what
of these people, they're all experts. They all make
everybody's an expert.
makes their deals sound so amazing.
Yes. Well, and they know way more than me, so they are experts, right?
And that's part of the problem is people don't really know how to do the due diligence and how to
Yeah.
dig into all of that. So I've spent a lot of time here recently showing people how to look up these operators so you can actually see what wells they haven't, because it's all public knowledge. All of it
Mm,
is
I
public and
suppose it's very highly regulated.
it's very highly regulated. These interests are recorded at the county level, just like real estate. And every single state has a governmental entity, a third party that regulates all this data and information. And you can go and pull it up on any operator. I can go pull anybody up, see what they've done. I can see what kind of permits they have in place, and it's all out there to look. So I've just been trying to show people how to look that information up and verify that people are doing and own the stuff that they say that they're owning and selling.
Yeah. Yeah. That's it's an interesting industry. Anything else you want to say about the oil and gas industry? Otherwise, we're going to shift a little bit.
Yeah, no, I mean it's a great place, just make sure you do your due diligence and,
Yeah.
check on the people, but it has great tax benefits, great returns. It's a great asset class if you can find the right opportunity.
What are the returns compared to a real estate deal? You've got a short-term rental fund, I see. You've done other real estate. What's the return profile on like an oil and gas versus a real estate deal?
They're typically higher. I mean, like our
The
last
which one's higher?
the oil and gas is typically higher.
Oil and gas is higher. Okay.
But it's also like, it's not like real estate where I can say, okay, we have 300 doors. We're going to charge this much for rent. We've got this much
Mhm.
of a vacancy percentage. It's not like that. I mean, it's very dependent upon how much oil are we going to be able to pull out of the ground and what is the price of oil going to
Price of
do.
oil. Yeah.
Yep.
Yeah. If
Those,
you get stuck in a fund or in a deal and the oil's at $80 a barrel, it goes down to 20 for a period of time there, that's going to hurt really bad, right?
it does. Well, here's the other thing too. A lot of these operators, they'll choke back those wells. They're not going to just leave them open and flowing. Like they'll choke them back
Sure.
and wait for the price to come back up some. So, I mean, there's definitely strategies around that. But
But the cash flow is not coming in during that time.
no, it'll probably either slow down to not much or nothing.
Yeah.
But you want that. You want to wait for the prices
Yeah,
to
for
come back
sure.
up.
For sure.
The great thing about it though is, I mean, like if it's going to produce 800,000 barrels, it's going to produce 800. So you're going to have times where it goes down, but you're going to have times where it comes back up and flows really well. So, and we won't get into all the nuances of that, but it does, fluctuate with that price. The price matters.
One of my best stock purchases ever was I purchased Exxon
Yeah.
when the price of oil went way down, and I purchased it at like, I can't remember what it was, like $30 a share or something like that.
Yeah.
I'm like, this is crazy. So I bought a bunch of it. And of course, go look up the price of Exxon now. It's quite a bit higher
Yeah.
than
No,
that.
that's amazing.
So
Well, and most of our stuff is typically runs in the, 3.5 to 5x, your initial
sure.
investment. We stay pretty conservative on those numbers. A lot of these wells are going to produce for 20 years. I have some in my
Wow.
portfolio that, were drilled 50 years ago that I still get, checks for every month, like
That's
clockwork, which is awesome.
That's awesome. There's nothing better than cash flow just continuing to come in.
Yes.
What
Yes.
um you have a uh is it a marina that you have?
Yep, looking at marinas. That's on my website. This is such an interesting asset class to me, and I'll tell you why.
Yeah.
So, I know a lot of people like multifamily, and I'm not knocking the multifamily stuff, but I feel like it's very institutionalized at this point, and there's
Hmm.
a lot of
It is.
other real estate asset classes that have so much potential. And, 20, 30 years ago, apartments were owned by mom and pops.
Yep.
We see that a lot in RV parks and self-storage now. Self-storage is moving a lot more towards, institutions and things, but there's so much opportunity. And this is why I love the marinas. They're all owned by mom and pops. Their kids don't want to take the business over. They are literally doing like back of the napkin accounting. They have no idea what their rate should be for, these dock spaces for these boats. And I am not I'm not a boater or a marina person, so if I'm using any of the wrong terminology, forgive me. But there's a ton of value add opportunity because a long time ago, people had sailboats and now they have motorboats and they want those covered spots so you can go in and cover them. And a lot of these people are leasing their spaces out for 20, 30 years at a time, and they're building out outdoor kitchens and putting out TVs, and they will go hang out in their boat at the marina and grill and cook and watch football games. And so there's all this community around there. And not just that, but you can get 10, 12, 15 streams of income because you've got, boat rental spots, you can have gas, restaurants, dock fees, I mean, all kinds of things. And so it's very interesting. You can go in and acquire it with creative financing because the people are ready to retire and they want out. And so I've been going down this marina avenue, and it's very interesting, and I really, really like it for all of those reasons.
Yeah, it's funny you say that. We were in Door County, Wisconsin, which is on it's on Lake Michigan. And so we actually went to a marina on Lake Michigan, and a lot of gorgeous boats, their yachts, and they allowed people, the public, to walk through it. But so we walked through it. The kids loved looking at the boats, of course, and dreaming about getting one of those boats. Uh, but it was amazing how many people that owned boats were just there. They're just hanging out with each other
I had no
and
idea.
grilling, and yeah, it's like a lifestyle. They're not out on the water. They're literally just parked at the marina and hanging
Yes.
out. So
Which is why they'll spend 10, 20, $30,000 building these outdoor kitchens and putting in TVs and all of this. We live really close to Grapevine Lake in the DFW area, and my son plays baseball. So one of our baseball fields that we play at a lot is right by the marina. And when it's nighttime, you can see, I mean, some people have Christmas lights and you can
mm,
hear music, and there's a whole lot going on down there. And it's every single night. These people get off work and they head to the marina.
that's interesting. This marina, by the way, probably has some nice value add because the people were hanging out, but the only amenities they had a little pontoon boat. They stripped out a pontoon boat. They put like lawn chairs on it and a picnic table and like a little portable grill. And that was like their amenity base. Was they had like three of those that were in the
That is
marina.
hilarious. That's
So
like
I would
a
imagine you
redneck.
could, it's redneck, totally redneck. I would imagine you could make that a little bit nicer, and then you can
Hey,
probably,
whatever works, right?
yeah, yeah,
But yeah, so it's not an asset class I'd ever really heard anybody talk about.
yeah,
Came
right.
across some people here and they are doing marina funds. I learned about it about a year ago. It's something I really want to get involved with. There's a ton of opportunity. These guys, this is what they do, but I am still like, I don't know what I don't know. So I'm still figuring out what I don't know. There was something about at the docks, somebody said, well, is the bottom treated for, I can't even tell you what it was. And I thought, wow, I didn't even know to even ask about that. So I'm doing a ton of research, a ton of research and going out and seeing stuff and just checking it out and finding out what that is. I really need to know the ins and outs of everything before I can bring it to other people. But once we do, it's gonna be really great. I'm excited about it.
Yeah. Let's talk about raising money, raising capital. You're bringing investors into these deals. What's some advice you'd give our listeners, to somebody who wants to raise capital themselves? What's some advice you'd give? Like, how are you finding your investors? What are you doing? What's just some tips that you can give our listeners?
Yeah, that is such a good question. I have people ask me all the time. I just started raising capital in the oil and gas space 3 years ago. And I think I was adding it up the other day. I'm about to cross the 20 million mark, which is great. Our last deal we just did was 7.5 million. But I think where people like to talk about their deals, I approach it from what problems am I solving? So
Mm.
a
So
lot of
good.
yeah, all of my investors, they're trying to pay less taxes legally. They're trying to figure out how are they going to maintain their lifestyle when they retire. They're concerned about their retirement plans that are in the stock market, dropping 30% the year they retire. They're concerned about all these things. So everything I talk about is all about how I'm solving the problems that I know my avatar has. And so I don't run around telling people, oh, I have this oil and gas deal. I tell people, look, I can help you reduce your taxable income. I can help you pay less taxes legally. I can help you create great monthly cash flow so that you can redeploy that into another investment or pay for college or whatever it is that you need in your life. So I've built all of my marketing around that.
I love that. Well, first of all, it allows you to be a little bit flexible too in what you're raising. So when we're talking oil and gas, great, but it also can fit when you bring a marina to your investors, when you bring a short-term rental portfolio to your investors, and so
Well,
on.
I really believe in diversification. And I
Yeah.
know, some people have the philosophy that you need to focus on one thing and live there and stay there. But let me tell you, I've lived through that $80, $100 oil and $20 oil, actually sub-zero oil, and that hurts. And I will never put myself in that position again. And I will make sure that I am really well diversified so that when that cyclical asset goes down, I have plenty of other asset classes and income coming in from other places that it doesn't impact my lifestyle and my way of living.
By the way, you're diversifying your investments that you're offering, but you're also still focused very much on what you just said. You're solving the problems that your investors have. And
Yes.
that's what your sole focus is, right? The the product that you're raising for might be different from fund to fund, but you're focused on that problem. And I really like how you said that. Look, if you're going to raise money and you're focusing on the deal, somebody can find another deal that's potentially better than yours, right? Especially
Absolutely.
because I think a lot of investors or sponsors are always trying to tout the returns. Returns are high, and investors get excited about it. But if you truly dive in, like, why are you investing? And your investors, you get to know your investors. You say they have a problem. This is what I'm solving for their problem, and everything I'm doing is marketed around solving their problem. It's less about the deal, it's more about what we're trying to actually achieve and solve for, which I really love that strategy. I think that's fantastic.
Well, and I spend a lot of time talking to my investors. I had a new person that I'd never met. He booked some time on my calendar yesterday, and we ended up talking for an hour. And we spent that whole hour talking about, the Treasury 2 and 10 year yield curve just uninverted. And
Yeah.
I am not an economist, but historically for 70 years now, that has preceded a recession. So I was like, I'm really looking at what does that mean for oil and gas? What does that mean for multifamily? Where do we strategically need to be investing? And let's have those conversations and put some stuff together and find a solution to hopefully kind of, circumvent and help us navigate, what's coming.
Yep. No, I love that. Solve problems. Don't focus on. I mean, the deal is important. Don't get me wrong, right? But
Sure.
solving problems is first and foremost the most important thing to be talking about, and how your opportunities then is actually matching that. So,
Right.
um, what's a mistake that you have made, and how have you learned from it?
Oh, I have a doozy
I
of
think
one.
you got a fun
So
one. Yeah.
I have a doozy. So, when I very first got into syndication, I had somebody ask me if I wanted to raise money for an oil and gas deal, and I was like, yes. They explained the technology to me. I understood it because I understood how all of that worked. The people that were involved in it. It kind of reminds me of like a Bernie Madoff situation. Like the guy that ran all of this sat on the U.S. Department of Energy board, and
Oh
I was
wow.
honored to even be asked or even have the opportunity to be a part of this. And so through that, some of the things that I was asking for weren't provided. And it was like, I don't know about this. Like, and then
Mm,
people just kept telling me, nope, this is very typical. This is how this works. And unfortunately, it ended up being a Ponzi scheme. So I raised a few $1 million for something that ended up being a Ponzi scheme. And I had a really difficult time with that. I think at one point in time, I don't think I got out of bed for a week. And, it's really awful to lose your own money, which I did. Way worse is losing somebody else's money, and then knowing that, the people that I was involved with, these were really close friends that I loved. That betrayal there was just like an extra, jab and twist in the back. And so I learned a lot about character and a lot about, I had some kind of gut feelings and instincts about it. And ultimately, the last deal I was working on with them, it was a, $5.2 million deal. And some of the paperwork started coming in from previous deals. And I was like, this is not right. So I made a bunch of demands and I said, look, I know where production comes from. I know what all of this is because I have it myself. And I said, I need A, B, C, D, and E. And they wouldn't provide any of it. So we ended up terminating that $5 million deal, sending the money back to the investors. And, these big names were like, if you walk away, you can never come back. And, I'm just Courtney waving my red flag. And the treatment that I received was awful and it was really tough. And so I finally had a great attorney that kind of stood shoulder to shoulder with me and said, you know what? I want what Courtney's asking for too, or I'm not doing y'all's docs anymore. And it was just such a relief to finally have somebody stand next to me and kind of, make those demands too. I cried. It wasn't a cry from like being sad. It was just kind of for a month I'd been taking that on and fighting that battle myself. And ultimately, unfortunately, I got a call about a month later after terminating that deal that, that group had been raided by the FBI and the SEC. And turned out to be a Ponzi scheme. It was crazy, 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 crazy. But I learned so much through it. And probably one of the number one things is that when I know that I should be getting this and I'm not getting it, honesty and integrity first and foremost are non-negotiable. That is a non-negotiable line. And then if I can't get the documentation that I need, I don't care if it's under an NDA or whatever the excuse is, I'm not doing the deal. I'm not going to be a part of it. So it really changed the way that I approach things and the way that I do deals with people. Initially I was so honored that these people were willing to do a deal with me. And now it's like, okay, buddy, now let's see if you can provide what you need to provide. And then if you do, then possibly I'll let you do a deal with me. It's completely flip-flopped. And
Right.
those demands and the things that I need are non-negotiable also. So it's just, and going through that SEC investigation opened up my eyes to a lot of other things that I hadn't even thought about in that first scenario, which were really good too. So
Were you investigated at all because you
it's
brought
still
money into
open
it?
now. It's still open. It's still ongoing.
Got it. Got it.
So I know like our attorneys, we did not know that it was bad. We didn't
Yeah.
know. And so I am not being criminally investigated. No. In fact, I felt like something was wrong. So I was recording everything and I've actually turned over. I started once I started investigating, I kept really good documentation and recorded everything because I just had a feeling and I've actually turned all of that over. So
One of the things that makes me a little bit nervous of where the syndication industry has gone is that you've got a lot of people raising money for other people's deals, which I think is amazing. That's great. That's,
but they aren't doing due diligence, and that's the problem.
but that's what makes me nervous, right? So it's not the fact that there's other people raising for other people's deals. That's how we get deals done, right? That's how,
Yes,
you know,
absolutely.
multifamily and marinas and oil and gas, that's how things get done. But it's exactly what you just said. It's the lack of due diligence. And what I think is even more or not more important, but as important is the knowledge of what to be looking for and then making sure you're actually following through with that. So that's what gets me nervous is I talk to people and they're raising for this commercial real estate deal and you ask them three questions, they have no clue. They don't know what they're even looking at. They just saw somebody that's touting a 18% IRR and they're like, I want to raise money for that deal.
I get people ask me to raise capital for them all the time. And the two most recent ones, one was a short-term rental fund and, the returns were great. I know there's a ton of people raising money for it, but I was like, okay, look, I need a list of all the properties. And they were like, well, we gave you the Airbnb links. And I said, no, like I need the actual property
Yeah.
addresses. I built a spreadsheet and I went in to make sure that they actually owned the properties that they supposedly had in this. Anyway, I had built out this list and they were like, well, it's going to take us a little bit to get this together. Nobody else has ever asked for that. And I just thought,
That's amazing.
really? And another deal that was, it was a debt fund, and they were loaning people, hard money on real estate, which is great. And their whole pitch deck was all about the returns. Great. But I said, okay, I need to know, like, who are you giving these loans to? What criteria do they have to meet? How are you evaluating these properties? Like, I had this long list. I said, what is your process if they don't make a payment? I had all this list of, what's happening on the back end. And they were like, well, nobody else has asked for that. We're gonna have to put all this together. And I know they had 5 or 10 other people already raising money for this at the time. And I just thought, this is crazy that nobody is asking for this stuff.
Yeah. And that sounds like maybe your biggest lesson you've learned from this Ponzi scheme. Is that right?
Oh,
Just
yeah. My due diligence, like, is probably on a whole nother level. I mean, I just borrowed money from my investors last week. And, when I finish, paying for that property this week, like, I will give them the receipt from the guy I bought it from. I will send them a copy of my wire transfer that shows that I actually sent them the money. Then once that gets recorded, I will share that recording with them. Because I like that transparency and
yeah,
I like for them to know, like, they email me and they're like, your communication and the information you provide is awesome, because nobody provides that stuff. Like, I want them to know, okay, I loaned her the money and I'm like, here you go. Here's my wire to purchase it. Here's the receipt from the seller. Here's the recorded document at the county level. So, and then we'll go in and we'll file that lien and, guarantee this loan. But I like providing all of that. I give them, like, hey, it's going to take me a week to do this. So as soon as I get this part done, I'll let you know. Like, I want them to know and feel comfortable and confident in what they're doing with me. And that the lack of communication and, like, where are we at with these deals is my biggest frustration in deals that I've passively invested in. So I try to over communicate. I'm not 100% great at it all the time, but I do communicate a ton of information constantly.
yeah. That's the biggest complaint I hear from people that have invested with us is uh, I've invested with other groups in the past and they just don't communicate well.
Yeah.
I haven't heard from this sponsor for 3 months or, that type of thing. And it's over and over. But yeah, love it. So if you're going to passively invest, you're going to raise money, look, do your due diligence.
Yeah.
Y-
And if you don't know how, find somebody that knows how to do it in that
Yeah.
asset class.
Yeah. Oh, yeah. Good, great advice. I mean, or just don't raise for that asset class. you
Oh,
know,
yeah. If you don't know how
you,
to do the due diligence, I have people call me all the time and they're like, hey, I want to raise money for this oil and gas deal. Can you vet it for me? Like, dang, if you're going to put investors' money into something, you should
yeah.
be able to vet that deal.
How do you know? How do you know somebody can vet it for you, but if you don't even have a clue of what they should be looking at or what you should be looking at, how do you even know? Like, you don't know. It's a prayer.
And I don't want to put my name on, oh, Courtney said it's good. Well, okay, I hold on here. So it's kind of it's a tricky
Yeah.
line,
Yeah. Yeah. Courtney, what a couple last questions. What's a favorite book that you can recommend to our listeners? And by the way, what's the title of your book?
Oh, so okay, so I have this Next Level Your Life. Super cool opportunity. Zig Ziglar's son is in here, Dennis Waitley, some really great, authors. We co-authored this, and I
Yep.
have another one that's about to come out that is it hasn't released yet. I actually haven't even told anybody about it, but it's called Lessons from Thought Leaders, and I actually do a little bit deeper of a dive into what I went through. And really, it doesn't talk a whole lot about what I went through the Ponzi scheme, but it talked about how I navigated it. Because I don't think, everybody always stands on stage and stands in places and they talk about their successes and everything else. But, we all go through challenges and we face difficult things. And how do you navigate that? And how do you work through it? How do you overcome it and go on? So, my story is really more about how I navigated that and how I kept going. And so One book that I love is, then I referenced it in this chapter, is The Gap and the Gain, because The Gap and
Mm.
the Gain talks about, in every situation, whether it's positive or negative, there are good things to take even from the negative things. So you've got to look and find that. And it's a great book. I have it on Audible and I love to listen to it when I'm out walking or other things, because there's so many great nuggets and reminders, and it really, everything is all about mindset. Mindset is so powerful.
You're gonna have to write a book when this chapter is completely closed, right? When the whole
Yes.
investigation and all that is done,
Agreed. I've
you're
already
gonna
come
have to
up with
write a
the
book.
title for it.
Yeah, I'm sure it's gonna be a great one. You know, you got to learn from the pain that you've gone through, and it sounds like
Yes.
you've done that
Well, and if I
extremely
can
well.
share others, what I went through, and prevent them from making the same mistakes, I want to help other people
Yeah,
figure out how to avoid it and navigate that as well. So,
yeah, yeah. There's always gonna be people like that in this world, and so if you can learn how to navigate, avoid those types of people, you'll be very much better off.
yep,
So,
agreed.
last question, Courtney. What are your three pillars of wealth creation?
Oh, that's such a good question. When I first started down this path, and I don't know that I necessarily have three pillars, but I started going to kind of a goals retreat each year. And,
Mm,
setting your goals is powerful. And when I first started down this path, it was like, oh, I want a sports car and I want this and I want that. And really it's shifted so much, because at the end of the day, the money is great. We need money to fund everything. We
sure.
really
Yeah.
do. So, but I thought, oh, I'm gonna go for this net worth, but really, I am looking for more of a monthly income, because I want the time and the freedom to spend my time doing the things that I love doing with the people that I love doing them with. So for me, it really is all about that. It's not necessarily that ultimate big number. I'm looking for more of a monthly passive income that I'm trying to hit. So, I've got a 15, 16-year-old now that plays baseball, and we play all over the country, all over the world, actually. It's amazing. And I want to be able to do that. I picked up and ran to Cabo last week with my husband, like living that life, my life the way I want to live it with the people that I want to live it with. And I tell you what, being able to impact others' lives in a way that has the same effect as what it's doing for me is so fulfilling. When I get those text messages that says, "Holy cow, you saved me an actual $50,000 on my tax bill. This is awesome." Like, that's the best feeling in the world. And
Yeah.
knowing that I'm helping other create that time, freedom, and that additional income that they need to go do those things. That's the best thing in the world. So, not necessarily pillars, but that's really just it.
Are we to see your son playing pro ball here in a few years?
You are, y'all. You really are. So, okay, this is another really cool thing that happened. So, he was invited to something called Area Code this summer, and I had never heard of it. I didn't know what it was. We just got into high school baseball, and Area Code is the top 100 underclassmen in the country. It is by invite only, and you have to be invited by an MLB scout.
Mm,
And for him to have been invited to that, and he didn't make that team. I mean, we had kids there. One kid was committed to A&M, one kid was committed to Florida. Like, he was a freshman. To go in there at his age and be competing with these kids. I mean, they know who they're taking before they even have those tryouts, but for him to even get invited and to go out and freaking compete like he did, he went out there and balled out, and it was awesome. And
that's
so,
cool. That's fun.
one of the scouts was like, "Your kid's gonna play professional ball if he continues down this path." So he wants to play baseball for UT, and then he wants to go on and play professionally. So he's a
Cool.
sophomore this year, and they've moved him up to the varsity team, which is amazing to be a sophomore. Last year as the freshman, he was the starting shortstop for our JV team. So it's been amazing. We have a game today. I almost wore my baseball shirt for this, because I have my game day outfit. I have a game day routine. And so yeah, so we're gonna go and do that this afternoon. But yeah, I will keep everybody posted. I talk about baseball all the time. Hence my, fastball capital is, my
Yeah,
group I do everything with.
I love it. I love it. Well, proud mom. That's great. Courtney, really appreciate the time you've been able to spend with us. How can our listeners get in touch with you?
Oh, good question. So, if anybody wants to learn a little bit more about oil and gas, I have, you can go to oilandgasreport.net and get just kind of, it goes a little bit deeper into the tax benefits and things. And then I have a website, courtneymoeller.com. From there, you can book some time on my calendar. You can shoot me an email, all the things. And I'm on LinkedIn as well.
Okay. Yeah, we'll put that in the show notes, and then listeners definitely reach out to Courtney. Got a lot going on, a lot of exciting stuff. The oil and gas sounds fascinating. I might have to invest in your next fund on that. So, Courtney, really appreciate your time. A lot of great advice here, hard lessons learned. So really appreciate it, and you have a fantastic rest of the day.
You too. The honor was all mine. Thank you.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.